Hi everyone, welcome back to my channel, Your Everyday Economics. I'm Parul. In today's post, I will talk about what you should consider if you haven't started investing in stocks yet or if you're a beginner investor. The first step is to set your investment goals. Before you start investing in stocks, it's important to define your investment goals. Do you want to save for retirement, a down payment, or a home, or another long-term goal? Understanding your goals can help you create a long-term investment plan. Number 2, determine your risk tolerance. Investing in stocks comes with risk, and it's important to understand your risk tolerance before you start investing. Conservative investors may want to focus on blue chip stocks with a history of stable returns, while more aggressive investors may be more comfortable with higher risk, high growth stocks. Research companies and industries. When investing in individual stocks, it's important to research individual companies and industries to make informed investment decisions. Look for companies with strong financials, competitive advantages, and growth potential, and consider investing in industries that are poised for growth in the long term. This does require quite a bit of research by looking at companies' financials. For conservative investors, it is best to start with a broad-based index fund or an ETF. By setting a monthly or weekly contribution, you can ignore market fluctuations. Predicting the future of a specific company is very hard. Thus, the risk is much higher compared to investing in a fund, which is a pool of many companies from different industries or sectors. Number 4, build a diversified portfolio. You can invest in a variety of companies and industries to spread your risk through index funds or ETFs. Vanguard, Charles Schwab, Fidelity are all good brokerage companies offering index funds. It's important to research and compare their fees, historical performance, and other factors for different index fund providers before making any investment decisions. Also, consider adding other asset classes such as bonds and real estate to your portfolio. Invest regularly and stay disciplined. Investing for stocks for long-term growth requires discipline and consistency. Set up automatic contributions to your investment account and stick to your long-term investment plan even in times of market volatility. As I mentioned in my previous post, investing in funds is a great way to do that. Also, by following a strategy called dollar cost averaging, you can remove emotions from your investment decisions. The next is to monitor and adjust your portfolio. It's very important to regularly monitor and adjust your portfolio as needed. Rebalance your portfolio periodically to maintain your desired asset allocation, and consider adjusting your investments as your financial goals or risk tolerance change over time. So overall, investing in stocks can be a great way to build wealth over time. However, it is important to do your research and understand the risks involved. If you are feeling hesitant about investing in stocks, consider consulting a financial advisor, or you could take a course on investing to gain more knowledge and confidence. I'm not a financial advisor, but I like to give whatever knowledge I have gained through books and other blogs. So I try to incorporate those in my video for the benefit of everyone. If you haven't subscribed to my channel, please do so, and I will see you soon in my next video with more useful information. Till then, take care. Bye.